Elon Musk walked into a room full of angry investors, and what he said next left everyone speechless. In this video, we're breaking down the moment Elon Musk was confronted over falling stock prices, risky decisions, and bold promises, and the unfiltered response that stunned the financial world. Before we reveal what really went down, make sure to like, subscribe, and hit the notification bell, because you won't want to miss what one of the world's boldest CEOs said when the pressure was on. Musk isn't known for playing it safe, but this time, even his biggest supporters didn't expect this level of honesty or defiance. The setup: why investors were furious. Tesla's stock had been on a roller coaster ride for months, and major institutional investors weren't happy. Pension funds, hedge funds, and mutual fund managers, who collectively held billions in Tesla shares, were growing increasingly concerned about Musk's leadership decisions. The breaking point came when Musk announced another ambitious project while Tesla was still struggling to meet production targets for existing models. During a private investor meeting in Austin, Texas, representatives from BlackRock, Vanguard, and several other major firms confronted Musk directly. They questioned his focus, his Twitter activity, and most importantly, his commitment to Tesla's core mission. The tension in the room was palpable as seasoned Wall Street veterans prepared to challenge the tech mogul who had revolutionized multiple industries. The confrontation: what actually happened? The meeting started cordially enough, but things quickly escalated when lead investor Sarah Chen from Fidelity raised concerns about Tesla's declining market share in China. She pointed out that competitors like BYD were gaining ground rapidly, while Tesla seemed distracted by other ventures. Her voice carried the weight of millions of retirees whose pensions depended on Tesla's performance. Musk initially remained calm, but when another investor suggested he should step down as CEO to focus on his other companies, the atmosphere shifted dramatically. The room fell silent as all eyes turned to the man who had built Tesla from a startup into the world's most valuable automaker. What happened next shocked everyone present. Musk's shocking response. Instead of defending himself or making excuses, Musk did something completely unexpected. He stood up, walked to the whiteboard, and began drawing what looked like a timeline. Within minutes, he had outlined a detailed roadmap showing how every single one of his ventures was interconnected and designed to support Tesla's ultimate mission of accelerating sustainable transport. He explained how SpaceX battery technology was directly benefiting Tesla's energy storage systems, how Neuralink's manufacturing processes were improving Tesla's production efficiency, and how the Boring Company's tunnel projects would create dedicated Tesla transportation networks. His passion was evident as he connected dots that the investors hadn't seen before. But the real shock came when Musk made an unprecedented offer. He told the investors that if they weren't satisfied with Tesla's performance in the next 18 months, he would personally buy back their shares at a 20% premium to the current market price. The room erupted in surprised murmurs as investors realized Musk was essentially betting his entire fortune on Tesla's future success. The investors' reaction. The investors were stunned into silence. Never in their collective decades of experience had they seen a CEO make such a bold personal guarantee. Some were skeptical, wondering if this was just another one of Musk's publicity stunts. Others were intrigued by the sheer audacity of the proposal and the confidence it demonstrated. Sarah Chen later admitted that she had come into the meeting ready to demand Musk's resignation, but his presentation had completely changed her perspective. She realized that what she had perceived as distraction was actually strategic diversification that could benefit Tesla in the long run. The interconnected nature of Musk's ventures suddenly made sense in a way that traditional business models couldn't explain. The market's response. News of the confrontation and Musk's response leaked within hours, sending Tesla's stock price soaring by 15% in after-hours trading. Retail investors were energized by Musk's commitment, while institutional investors began reassessing their positions. The bold guarantee had effectively turned skeptics into believers, at least temporarily. Financial analysts were divided on whether Musk's promise was brilliant or reckless. Some praised it as the ultimate alignment of interest between management and shareholders, while others worried about the precedent it set for other CEOs. The consensus was clear though. Musk had once again proven that he was willing to put everything on the line for his vision. What this means for Tesla's future. Musk's shocking response has fundamentally reshaped the relationship between Tesla and its investors. By setting an 18-month timeline, he created a clear, measurable benchmark that goes far beyond the usual quarterly earnings reports. Now, investors have a concrete deadline to judge whether Musk's bold visions are achievable or just lofty dreams. This personal guarantee also ramps up pressure across Tesla's entire workforce. From engineers designing cutting-edge technology to factory workers on the production line, everyone knows their CEO has personally staked his reputation and fortune on their collective success. That kind of commitment can be a powerful motivator, sparking unprecedented innovation and driving teams to push beyond limits. However, it also carries risks. The intense pressure to meet such high stakes in a tight time frame might lead to burnout, rushed decisions, or costly mistakes. Balancing this tension will be crucial for Tesla's leadership as they strive to turn Musk's promise into reality without sacrificing the well-being and morale of their teams. In any case, Musk's guarantee marks a new era of accountability and urgency, one that could redefine what investors expect from visionary CEOs. The broader implications. This confrontation reveals a deeper truth about modern corporate leadership. In an era when CEO compensation often seems detached from actual company performance, Elon Musk's personal guarantee signals a powerful return to the kind of entrepreneurial risk-taking that built some of America's greatest companies. Whether Musk's approach succeeds or fails, it raises the bar for executive accountability, demanding leaders put their own skin in the game. The incident also shines a light on the shifting dynamics between traditional institutional investors and visionary entrepreneurs. Wall Street typically prizes predictability, steady dividends, and reliable returns, values that often clash with the disruptive high-risk nature of companies like Tesla. Musk's personal guarantee may act as a crucial bridge, offering investors the security and confidence they seek while preserving the creative freedom and bold innovation entrepreneurs need to push boundaries. This episode underscores a new model of leadership, one that blends accountability with audacity. It challenges the status quo, suggesting that true progress may require executives to share both the risks and rewards of their companies, realigning incentives for the benefit of all stakeholders. Love him or hate him, Elon Musk doesn't back down, even when billions are on the line. What did you think of his response? Was it genius or reckless? Drop your thoughts in the comments. The debate starts here. And if this gave you a new angle on Elon or investing, be sure to like, subscribe, and share it with someone watching the market closely. Until next time, stay bold, stay sharp, and always expect the unexpected.